Hello everyone, I am Joshua Hayes from BigWaveTrading.com, coming to you from Maui, Hawaii. Anyway, I want to start it off with the overall market before I go into my new hedge positions for the evening for members. The market looks terrible, everyone. It's absolutely atrocious right now. That trading range that we were in following the September 9th breakdown appears to be rolling over. We've been setting in a series of lower highs on the S&P 500 following a little series of intraday lows. Now that we've failed once again to get above the 50-day moving average, we're now rolling over on above average volume in the S&P 500. While that's ugly, we're going to go into the internal indicators, but at first I'm going to show you that that's confirmed elsewhere. You can see the same thing with the NYSE, that fake breakout to new highs, the breakdown, inability to get back above the 50-day moving average. Now we're starting to roll over on heavier volume. The NASDAQ 100 was even worse, as this threw my model into a fake out buy signal on Monday following its move to new closing highs. Even worse, it immediately reversed it. How many times does that now happen? Up here, once, twice, and now a third time, reversing back below the 50-day moving average and on the way lower. Once again, increasing volume. The Dow Jones Industrial Average obviously looks just like the NYSE and S&P 500 did. The NASDAQ wasn't quite as bullish as NASDAQ 100 as it did not hit new highs, but still, because the NASDAQ 100 is basically congruent with the NASDAQ overall, that model switched to a quick buy, back to a quick neutral, and now it's back under sell following Friday's session. All of our operational models are under operational sell signals. This means new longs have to be absolutely perfect. That means price has to be just above the 50-day moving average, and the intraday range of that price, preferably in between the opening and closing price, if it closes strong, the 5, 10, and 20-day moving average has to be touching price. It has to have strong fundamentals or absolutely be under a huge accumulation and be in play due to being an earnings contract win or some sort of catalyst. But unless it's perfect, there are no new long positions for now. It's total caution mode, especially since I thought on Friday we were out of October. We still have one more day of trading in October on Halloween. It could either be a trick and we could break down, or it could be a treat, and hopefully we find a reversal, and then we can start our seasonal uptrend, because we're going into the two months that are normally two of the top three most seasonally bullish times of the year, November and December. The market has never crashed in November, so it would be interesting if this actually leads to a crash, and I'll get more into that later because we do have a setup for something that could happen. Doesn't mean it will, but I tell you what, in this market, if you're not ready for anything and everything, I don't quite know what you're doing. You probably don't have a lot of experience. It's not a big deal, but I recommend you listen to us guys that have been around 10, 15, almost 20 years like I have before you start getting either 100% bullish or bearish out there right now. So overall, if you look at the NASDAQ, going back to August, it's still just trading range, but we're under a sell signal. Dow Jones Transportation Average is the only index not under a sell signal. It's still under a neutral signal, but all of the intraday reversals, these wicks that you see up here, and the inability to close at the highs is a warning sign that the Dow Jones Transportation Average could easily meet the market and move lower and hit a sell signal. Now the good news is we get that reversal to the upside I'm looking for under the seasonally bullish months of November, December. I got new long signals triggering, leading stocks breaking out above consolidation zones. Hey, great, awesome. The Dow Jones Transportation told us that it wasn't that ugly, and so did the banks. Before I get to the banks, I want to get to one more index, the Russell 2000. This is the one that's most concerning because this index, while it isn't extremely oversold, it's oversold, and yet it keeps selling off, and it does it on increasing volume as the IWM looks really bad. Now, I just want to go and show you the internals. I like StockCharts.com better for these. S&P 500, it's under that 50 RSI line. Momentum's to the downside. The MACD has recrossed that black line below the red line. These are signals to be out of the market. You want to see the RSI line above the 50 line and or be looking for a reversal like this. Once the RSI is below 30, it wasn't here, so the S&P 500 never got extremely oversold. But until you see us below the 30 line and you're looking for a reversal, I wouldn't be bullish, and or until we're back above the 50 and trending above the 50-day moving average, I wouldn't be bullish. I'd stay neutral to a sell signal like our models are. Our models are under sell signals for this reason. Now you see the S&P 500 there, looking at the NYSE, same thing. Below the 50 line, MACD re-rolling over. That's not good. Now I want to go look at the Dow Jones Industrial Average. You can see the same thing. RSI is holding up a little bit better, some positive divergence. Not really positive divergence, it's just confirming the overall lower lows here, but still not back above the 50 line. MACD isn't really turning higher here, but hey, it's better than the others, still not that great. New York Stock Exchange, like I said, same similar situation. Getting to the NASDAQ, you can see below the 50 line, MACD curling lower and moving lower. Confirmation of the current sell signal. NASDAQ 100, same similar situation. Confirmation with the MACD rollover and RSI below 50. Now, the main one that I want to look at is the Russell 2000 here. Like I said, we've been below the 50 line. We're still selling off. MACD looked like it was flattening out here and turning from oversold levels. And then boom, a breakdown right here to new lows. So it hits new lows from the already pretty oversold MACD line. So if anyone is thinking, okay, well, we're near 30 and we got to bounce and we're near this negative 10 mark on the black line, we're going to bounce in MACD. I want to remind you that this is how ugly sell-offs start. You get into oversold territory, you keep selling off, and then you get extremely oversold. But before you do that, you go through a lot of pain. So now I want to go back and just look at the past 1 year of the Russell 2000 here, and I want to show you when that happens, how it happens. So back here in December, you can see price started to rally. It looked like the MACD was rallying from oversold levels. So look at these levels right here and look at where they're at all the way over here. That's where we're currently at. Now you can see what happened whenever MACD tried to bounce from the oversold levels and then broke to new lows right here. That's basically, if you look at this price pattern here, kind of where we're at right now on the Russell 2000. And then what happened once MACD broke to new lows? We hit that big, nasty sell-off finally into the extremely oversold levels. RSI got below 30 here, and then we started to bounce, and then still failed and went to newer lows. But look at the MACD, positive divergence. Look at RSI, positive divergence, but we're back below the 30, turning higher right here. MACD black line crossed above the 50, and we're back to trending higher. But the point is, we're basically on this chart right here, right now, this is about where we were at back in January, and you can see what happened. We sold off into the lows. Now, November is historically a bullish month, so this would be quite something if it happens, but it could easily happen, so I need everyone to keep that in mind. Now, the reason why we might not just crash just yet is that there are some places holding up, and that's basically because of the possibility of rising interest rates. The XLF is still trending above the 50-day moving average, while the KRE did pull back on above average volume on Friday. It's still trending above the 50-day moving average. And of course, the KBE is basically the XLF, still trending above the 50-day moving average. No real breaks. If we look at Goldman Sachs, if we look at JP Morgan, if we look at Morgan Stanley, nothing real terrible. Credit Suisse is still holding those lows and bouncing off those lows, and so is Deutsche Bank. So nothing looks too terrible there. There's Citi also above the 50-day moving average. You can see Visa still holding, and MasterCard following Friday. Big upside. So if all of these stocks were breaking down along with what I had, I could say we could crash, but it's still not a given. But you can see Apple, the reversal off earnings, not good. Amazon, big reversal off earnings, not good. Microsoft kind of rolling over following earnings, not good. I believe Priceline has earnings coming up, but you can see the intraday reversal on it, not good. And then you can see Facebook's intraday reversal with the big wick, not good overall. So not good price action out there. I want everyone to exercise caution here. I'm looking for a good November, December, but it could get really ugly really fast before that happens. The main thing, I still have a ton of long positions, but I continuously have been adding hedges ever since the market started to act weird after September 9th. So during this entire period, anytime a hedge signal has triggered, I've been taking it, and against our long signals, with most of them with gains. So our stops are at places that we'll be able to leave our positions with gains. Our hedges are in the money. So overall, if the market does decide to roll over here, I will have a ton of stops hit, and I'll be leaving the majority of those positions, over 75%, with gains. The other 25% are going to be for extremely tiny losses, because that's how I operate at BigWaveTrading.com. Tiny losses. Out of 10 trades, you're going to have probably, out of those 10 trades, 4 are going to be small losses, 4 are going to be small wins, and 2 are going to be massive wins. Those are the stocks that I try to focus on whenever I do my top current holding updates. I want everyone to see the big wins. The small losses and small wins, those are irrelevant. All right, everyone. Great luck on Monday.